Let's take a look at dollar NOK, the US dollar versus the Norwegian krona. Now we can see here that we are at this stumbling block here. This level, 8.711, hasn't been breached since 2016, so for about a year and 4 months. And what is significant here is last week's close as a bearish pin bar reversal. I know a number of you are already in this trade short. As we discussed last week, a potential power zone sell. This is the level of supply where typically people long in the US dollar versus the Norwegian krona are actually unwinding their positions into this level, because this is the best value they've had for a year and a half in order to essentially sell their US dollars and buy back the Norwegian krona. So it makes sense. But what is interesting about this setup is we've got a bearish pin bar reversal, which is a safer entry, off this horizontal level. We've got bearish reversal divergence, which is basically a sign that the bulls essentially heading into the level are actually getting weaker. The strength of the bulls is getting weaker despite price action last week making a higher high into this level. It just rejected it. Bearish pin bar reversal, that's a strong signal for a sell. But what is interesting as well is the fact that we've made a lower high here with the RSI sitting 6, whereas in comparison price has made a higher high. So that's what we call divergence, bearish reversal divergence. We've also got the crossover, the overbought for stochastic. So these are a couple of tells here, but that in conjunction with the theme, what we're discussing about the French elections, if, for example, Macron does get in and it's confirmed, and or his lead is bigger over Marine Le Pen, then we can reasonably expect the euro to increase in value and the US dollar to decrease in value. So as this bearish pin bar reversal essentially, it's a US dollar short sell essentially, then that ties in quite nicely with the French elections if Macron wins. Okay, so that is where we've got news potentially perpetuating a technically sound reversal setup here. So to trade this one, if you're not in it already as a result of this level here, the power zone sell setup, that is the higher risk option, we've got the safer option, which is trading the break of the low here of this bearish pin bar reversal. So entry just below the low, stop loss above the high, and first target the midpoint, so that's about just shy of a 2 to 1, and of course second target the bottom of this range, which is a 4 to 1. Okay, so if you're risking 2%, that's a potential 8% gain. So if that's good enough for you, please bear in mind that reversal trades are less likely to succeed than trend-based trades. By all means take it if you like the look of it. Okay, so just to recap, this setup is a bearish pin bar reversal against a level which hasn't been broken in essentially a year and a half. We've got bearish reversal divergence on the RSI setting 6, and we've also got the overbought line just being crossed over by a stochastic. And we know that, okay, if in the French elections, if Macron wins and basically we've got the continuation of the status quo, like France is still going to remain in the EU and all is hunky-dory, then we can reasonably expect the US dollar to fall off the back of that, because investors, funds, institutions will have faith that all is looking better in Europe or rosier in Europe, and there'll be no need for that flight to safety in the US dollar. Okay, so that is the US dollar versus the Norwegian krona on the weekly time frame.